Hey Money Guy family, it's your host Brian Preston, back with another episode of Ask the Money Guy.
That's right. You guys have financial questions. We have financial answers. Go out to your favorite social, use the hashtag AskTheMoneyGuy, and we will answer your questions right here in the Tesla. Or you can go out to our website, moneyguy.com, ask a question there, like today's listener, and we will answer it.
It's Brian Preston, the Money Guy.
This comes from Maria, and she says, can you explain the difference between SEP IRA and 401ks as retirement plans? Yes, we can. And that's actually such a great question. That will be a forthcoming full episode of the Money Guy Show. So then she goes on and she says, I was checking about HSA, health savings accounts, and HRA, health reimbursement accounts. Can a person have both? So today's question is, can you have both an HSA and an HRA?
Maria, that's actually a great question. And but before we jump into giving you that answer, I feel like a lot of people would probably like to just have a little overview of what all those different things are.
Sure.
And we've done full episodes. By the way, if you haven't checked it out, go to moneyguy.com. We do have full episodes on what a health savings account is, but let's just give a quick overview. A health savings account, it's going to be the first one I'm going to talk about. The key provision there is that it's always tied to a high deductible plan. So when you hear high deductible, it's exactly what its name implies, is that it's got to have a minimum threshold of a deductible. And for a single person, that's around $1,350
That's
in
right.
2018. And for a family, $2,700, meaning that your health insurance has to, at a minimum, have a deductible at those levels.
That's right.
But when you do this, because why do they do that? They want you to have an insurance policy that you're going to have skin in the game. And because you're going to be paying some of those first dollars, the health insurance companies are going to give you a lower monthly premium
That's right.
for that protection. And then the government comes on top and says, in addition to these things, we're going to create a savings opportunity through this health savings account. Now, what I like about the health savings account is that, and we get excited about this one, so I'm going to go ahead and make sure we got autopilot engaged so I don't lose my mind thinking about this benefit, is that it is triple tax advantage. So when you hear something, and by the way, there's not other products that are triple tax advantage.
That's right.
You can find education and other things that will grow tax-free, and even if you use them for education, it will be tax-free for distribution. But here's what's so cool about a HSA, a health savings account, for medical purposes. When you make the contribution, it's deductible.
That's
so
right.
you get a current tax deduction.
So kind of like the way a 401k works. You get a
Exactly.
deduction.
So you don't pay taxes. And then the next is the interest, dividends, whatever investment income is going on. That's tax-free while the account is growing.
So you can actually invest the dollars that you're putting into it.
You invest the money. If you once you get to a certain point, invest the money. And we talk about that in our episode, by the way. Can't get into that today. And then the third part of it is if you actually use it for medical purposes, even if it's got a lot of growth in it, completely tax-free. I mean, that is three things where the government essentially paid you to have health insurance and save for the future. And here's something that even goes, I guess you could say, as a quad of benefit, is that it doesn't make it tax-free, but if you get to over 65 and you have a huge HSA and you don't have as much in medical expenses, you can actually use some of this money for retirement purposes
That's right.
as well, which
Yep.
is a huge benefit. So HSAs cover all your qualified medical expenses, and that's about everything except for normal things that you already know from common sense, like health clubs, plastic surgery, those type of things. Yeah, those things aren't covered, but about everything else is. So that leads us, and here's the other part about HSAs. If you have a health savings account, that account is yours. You own it. It's portable. So, you jump around from employers or you set up your own plan when you're self-employed. That is an asset for you.
And it's not a use it or lose it benefit like something we'll talk about in a
You get to
second.
keep rolling it over. So the next one, a health reimbursement account. This is something that kind of seems similar to an HSA in the fact that it does a rollover feature, meaning that you don't have to use it or lose it each year.
That's right.
But this is a plan that is set up as a health reimbursement plan, health reimbursement account from your employer, meaning your employer is funding 100% of what goes into this HRA. So as you can imagine, the problem with HRAs, or it's not really a problem because it's great that your employer is funding it.
It's free money.
It's just that if you leave that employer, that money stays with your plan because the company, since they gave the contributions, they get to keep the strings of the funding. But it is nice that you can roll it over.
That's right.
And then, Bo, you had a third category of something you wanted to put on there, too.
Yeah, Maria, even though you didn't ask about this, I feel like one of the most popular benefits that we see in cafeteria plans is what's called an FSA, a flexible spending account,
Exactly right.
which is kind of similar, but there is a small nuance. With a flexible spending account, you choose at the beginning of the year how much you want to put into the account that year. It goes in pre-tax, so it offsets your taxes for the year, but you do have to use those dollars in that year. They don't roll over. There may be a grace period, but those are dollars that you put into the plan that you can use for co-pays, for deductibles, for prescription medications, for over-the-counter medications, but it is a use it or lose it. So you need to understand the three. What I love about all three of these plans is you need to really pay attention to how it gets funded. So we mentioned with an HSA, you put money in, your employer also can put money in. So there might be a free money there. With an HRA, only your employer puts money in, so you need to be aware of that. And then with an FSA, you're the one who puts the money in the FSA as well. So you need to understand how the benefits coordinate and if you can have both.
Yep. And also with FSAs, they save you on Social Security and Medicare, which is always that's a savings for both you and your employer. So that's good. And then here's something, because everybody knows there is this rule, and this also gets into Maria's rule, is you're not usually supposed to have a flexible spending account, an FSA, with an HSA, except for you can have a dependent reimbursement.
That's
so
right.
if you're like paying for daycare and other things like that, you can have that built into, have a flexible spending account at your office, at your firm, and then also the participants still have the HSA, because it's kind of a carve out.
That's right.
And that ties into, would you want to have both an HSA and HRA? That's what Maria's question is. The answer is technically yes, but there's a huge but with a capital B-U-T, because here's the thing, is that the IRS lists 4 ways that you can have both an HSA and an HRA, and that is, the first one is if you have a limited purpose HRA. That's for if your employer sets up an HRA that covers maybe something like a carve out like dental or vision, and then has that in addition to an HSA.
Something very specialized.
Yeah, very special. So that's very unique. You don't see that a ton. The next thing, another carve out is for retirement. If you have an HRA that, maybe they have an HSA for active employees that are under retirement, but then once they become full retirement age and retire, they jump over to an HRA that is funded by the employer. But that, once again, it's another very specialized carve out.
They also have a post-deductible HRA.
Post-deductible. So if you have think about it, because we heard for individuals it's $1,350, and for families it's $2,700 is the minimum deductible that has to be in a high deductible plan.
Right.
You can have an HRA that sits on top of the HSA that covers from the employer the portions above those initial deductibles. But once again, that's another specialized. And then the last one, Bo, was where you essentially just say, I have access to an HRA, but I'm going to suspend it. I'm going to put it on hold. So as you can see, Maria, I wanted to go through those 4 specialized provisions that the IRS provides, but in all actuality, you're usually going to see them completely independent of each other. You don't see a lot of HSAs and HRAs working together. I wanted to make sure, though, because we are Money Guy family members, and you guys usually are cut above everybody else, so you want to go deeper and understand that stuff. So that's why I wanted to share. But hopefully that helped out.
And while you might not be able to use each one of these plans in conjunction, there is a chance that your employer may offer you different variations of each. So it is important when it comes time for open enrollment, which is going on right now for a lot of employers, you make sure you understand the pros and cons to each one of those. Should I do an FSA? Should I do an HRA? Should I do an HSA? Brian, if I'm somebody who's trying to figure out, does this make sense for me? What's a resource, or how should I think about maybe approaching that decision?
Well, I think for sure you need to go out to moneyguy.com, look at our full episodes, because we do full deep dives on this content. We wanted to make sure Maria got her specific question answered today, and that's the purpose of the Money Guy Ask the Money Guy segment. You're probably like, God, can these guys just give away that much free advice? We sure did. And you're probably wondering, what's the catch? Here's the catch. We want you to grow, be successful, be the best version of yourself. But when you get to the point that the enterprise now is at the size that you start second guessing yourself, you start wondering, do I need to bring somebody in to look over my shoulder and also just be my partner in this? When you take it to the next you're looking to go to the next level, consider coming to the Money Guy. you know, if you go to moneyguy.com or boundwealth.com, we'd love the opportunity for you to pay us back by letting us give you an opinion of what's going on with your personal finance. I'm your host, Brian Preston, Mr. Bo Hansen. Make sure you give us a thumbs up and subscribe, and we really appreciate you tuning in and listening to us.